Okay, let's unpack this Bitcoin situation. It's been doing a really fascinating dance lately, hasn't it?
It really has.
Kind of caught in this real tug of war for its identity.
Yeah.
On one side, you've got these sharp price corrections,
hmm
but then on the other, there's this, well, accelerating trend of institutional corporate integration.
Exactly. And what's compelling here is that for you watching, these two very different stories are unfolding at the same time.
Right.
You've got the short-term market reacting, really quickly to macroeconomic shifts.
Yeah.
And then the long-term sort of structural repositioning by major players. They seem to be looking past all that immediate noise.
That's such a crucial distinction, isn't it?
It is.
So our mission today is to really dig into the latest Bitcoin News Digest from August 18th, 2025, and the sources behind it. We're here to pull out the most important nuggets of knowledge, basically helping you understand this complex market landscape, hopefully with some surprising facts and, clear insights. So let's start where everyone's eyes have been lately.
Right.
The price action. Bitcoin's seen a pretty sharp correction just in the last day or so.
It definitely has.
It retreated from a high yesterday, what was it, around $118,626.
That's right.
And now it's testing critical technical support around $115,000.
A key level.
It actually broke below $116,000, which is a big psychological and technical mark. That happened right after the weekly close last night at $117,490. Feels like a painful reset.
It does feel painful short term, but, this dip, it actually represents maybe a healthy market reset.
Okay. Healthy how?
Well, if we look at the technicals, that $115,000 mark is particularly crucial. Why? Because it's right where the 50-day exponential moving average, the EMA, is sitting.
The 50-day EMA, always important.
Exactly. It's a key short-term trend line for price. So if it fails to hold that level, well, that could signal more bearish momentum, meaning we could potentially see a retest of support down at $111,980, or maybe even the 100-day EMA, which is around $110,362.
Okay.
And the momentum indicators, they've definitely turned bearish. You've got the MESID crossing below its signal line.
Yep.
And the RSI, the relative strength index, that fell down to 44. Both of those are flashing pretty clear bearish signals. Selling pressure is outweighing buying pressure right now.
Gotcha.
But the speed of this drop, a lot of that was fueled by, a massive deleveraging event in the crypto derivatives market. Over $552 million in liquidations in just 24 hours.
Oof. $552 million.
Yeah. And get this. A staggering 88% of that, around $483 million, came from forced closures of long positions, people betting the price would go up.
So mostly longs getting wiped out.
Overwhelmingly. Bitcoin futures alone, $341.71 million of those liquidations, and 90% of that was longs.
So while it stings.
Right. While it stings short term, this kind of cleansing of excess leverage, it's often seen as a healthy consolidation.
Okay.
A necessary market mechanism, really, to build a more stable foundation for whatever comes next. It's the market flushing out those, let's say, less resilient, over-leveraged bets.
That's a pretty intense cleansing, as you put it. But, like we said, the market doesn't exist in a vacuum, right? What were the bigger macro forces pushing this, beyond just the charts?
You're absolutely right. It wasn't just technicals. This correction was pretty directly linked to broader macro shifts. Remember that optimism just a bit ago for a September rate cut?
Yeah, fueled by the softer CPI numbers, that really pushed Bitcoin up.
Exactly. It sent Bitcoin soaring towards its all-time high. But, that optimism didn't last long.
What changed?
Stronger than expected U.S. Producer Price Index, the PPI data, came out. And that suggested, maybe inflation pressures are sticking around.
Okay.
So the likelihood of a 25 basis point rate cut in September, it dropped sharply, went from almost a sure thing, like 98%, down to 84.8%.
That's a big shift in expectations.
Huge. And that higher for longer interest rate story, that usually makes investors pull back from riskier assets, all kinds of assets.
Including digital assets?
Including digital assets, definitely. And then you add in, the geopolitical uncertainty.
Right, the ongoing situation.
Yeah, investors are watching these high-stakes diplomatic meetings. You've got talks between President Trump, EU leaders, Ukrainian President Zelensky, trying to resolve the war in Ukraine.
High stakes indeed.
And while everyone hopes for a breakthrough, the current uncertainty, it definitely adds to a more defensive investor mood. People get cautious. So this raises an important question, I think, for you, the listener. How do you view Bitcoin's dual nature here? Is it mostly a short-term risk asset, jumping around with this news?
Yeah.
Or is it that long-term store of value, sort of immune to these daily ups and downs? It's a real tension.
It absolutely is the core tension, because here's where it gets really interesting. Despite all this short-term wobble and those macro headwinds, the big money, the institutions, they're not just staying put. Seems like they're actually doubling down.
That's the counter-narrative.
Right. The long-term structural trend, the institutional and corporate adoption of Bitcoin, it just seems to keep rolling forward.
That's exactly right. We're seeing some really significant moves in corporate Bitcoin Treasury adoption. Take Strategy, for example, formerly MicroStrategy.
The pioneers?
The Pioneers, the world's biggest public Bitcoin holder, they just added another 430 BTC, paid about $51.4 million, average price $119,666, right in the middle of this volatility.
Wow, buying the dip.
Buying the dip. That brings their total stash to 629,376 BTC. Acquired for $46.15 billion total. You almost wonder if Michael Saylor operates on a different plane sometimes.
He certainly seems to.
And it's not just Strategy. Look at Metaplanet Inc. in Japan. People call them Asia's MicroStrategy. They bought another 775 BTC. Now they hold 18,888 BTC, worth over $2.17 billion. That stack now significantly outweighs their corporate debt.
Incredible.
And the ambition keeps growing. Amdax, based in Amsterdam.
The Dutch firm.
Yep. They announced plans for AMBTS BV. That's going to be a dedicated Bitcoin Treasury company listed on Euronext Amsterdam.
Interesting. What's the goal?
Their goal: to acquire and hold 1% of Bitcoin's total supply. That's 210,000 BTC.
1%. That's huge.
It's huge. It's basically creating Bitcoin Treasury as a service, a regulated, publicly traded way for European institutions to get Bitcoin exposure.
Fascinating model.
And even Faraday Future, the U.S. electric vehicle startup, they unveiled this EAI plus crypto strategy. They're targeting an initial buy of $500 million to $1 billion in crypto assets, starting with a $30 million first tranche.
So it's spreading. And if you look at the ETFs, right, the spot Bitcoin ETFs in the U.S., that's maybe the most direct measure of institutional sentiment there.
It is. And what does it show?
Well, it paints a picture of, frankly, remarkable resilience. Just in the past week, U.S. spot Bitcoin ETFs saw net inflows of $547.82 million.
Right. So let's zoom out. What does that broader picture tell us?
Well,
this steady demand coming from these long-term institutional-grade vehicles, it contrasts sharply, doesn't it, with the behavior of those short-term leveraged traders we talked about being liquidated.
Night and day, almost.
Exactly. It suggests that the institutional allocators actually saw this price dip as a strategic buying opportunity.
Buying the dip, like strategy.
Precisely. And this dynamic where assets move from, let's call them weak hands, maybe those over-leveraged traders, to strong hands, like these institutions, that's generally seen as structurally bullish.
Right, strengthening the foundation.
It speaks to a growing conviction among the big players, looking longer term.
Okay, so we're seeing this transfer of conviction, this transfer of capital. What does all this mean for sort of the crypto industry's legitimacy, its quest for growth capital? Seems like the whole digital asset sector is integrating more with mainstream public markets.
Oh, absolutely. We're definitely witnessing a clear IPO wave right now.
Like Gemini.
Like Gemini, exactly. The exchange filed for an IPO, intends to list on NASDAQ Global Select, ticker GEMI.
Big move.
And it follows the highly successful debut of Bullish, that's another crypto exchange operator. Their shares more than doubled on day one on the NYSE. Valuation hit nearly $13.2 billion.
Wow. That must encourage others.
It definitely does. The success of Bullish and others like Circle, the stablecoin issuer ticker CRCL, it's validating the public market potential for these crypto-native businesses. And it's encouraging others like Grayscale, the asset manager, to push forward with their own IPO plans.
So why go public now? What's the strategy?
Well, these listings are strategic moves. Part of it is building a regulatory moat.
A regulatory moat. Explain that.
Basically, by going public, they have to adhere to really stringent disclosure and governance standards. U.S. securities laws demand it.
Right. A lot of scrutiny.
A lot. And that commitment helps them stand out from, less regulated competitors. It builds legitimacy, builds trust, especially with institutional clients.
Makes sense.
Plus, these IPOs create a whole new class of crypto-linked stocks, equities. This lets traditional investment funds, which often can't hold digital assets directly, get exposure to the digital asset economy anyway.
Interesting workaround. So the whole ecosystem is evolving. And speaking of oversight, the environment for digital assets is also being shaped pretty actively by regulators and law enforcement globally, right? What's happening there?
Yeah, definitely. In Asia, we're seeing some pretty notable developments. CMB International Securities, CMBI,
Subsidiary of China Merchants Bank.
that's the one, state-influenced. They've launched regulated virtual asset trading in Hong Kong. It's for qualified professional investors, initially Bitcoin, Ethereum, Tether.
That sounds significant, coming from a Chinese bank subsidiary.
It's seen as a major step. It connects China's traditional finance sector through Hong Kong's regulated sandbox with global digital assets, could potentially unlock a huge wave of demand long term.
Wow. Okay, what else in Asia?
Japan, their financial services agency, the FSA, is getting ready to approve the country's first domestically issued yen-denominated stablecoin, JPYC.
A Japanese stablecoin?
Yep, expected maybe as early as this fall. It'll be fully collateralized with liquid stuff, Japanese bank deposits, Japanese government bonds, JGBs.
JGBs. So this could actually create demand for government bonds.
Exactly. It's expected to create a significant new source of institutional demand for JGBs. It really highlights how stablecoin regulation can even become like a strategic tool for managing sovereign debt.
Fascinating angle. And what about the U.S.? Any big legal news?
Yes, a very significant one. Do Kwon.
The founder of Terraform Labs. TerraUSD Luna.
That's him. He pleaded guilty to fraud charges in a New York court.
Guilty plea. That's major.
It marks a really significant victory for U.S. regulators in holding individuals accountable for, well, fraud. It sends a clear message, aiming to sort of cleanse the industry, build long-term investor trust, shows the system can hold bad actors responsible.
Definitely feels like a pivotal moment for accountability in the crypto space. Okay, so beyond markets, beyond regulation, let's zoom back into Bitcoin itself, its underlying mechanics, its long-term value proposition. What are the foundational network developments telling us right now?
Well, the big one is scarcity. That narrative is just intensifying.
Because more is being mined.
Exactly. About 93% of the total finite supply of 21 million Bitcoins has now been mined. That's around 19.53 million BTC out there.
Only 7% left to mine over a long time.
A very long time. The remaining 1.4 million BTC will be issued at a progressively decreasing rate until about 2140, thanks to the halving events.
Right.
This absolute verifiable scarcity. It's fundamental to Bitcoin's identity as digital gold. And remember, the effective liquid supply is even smaller. Estimates suggest maybe 3 to 3.8 million BTC might be permanently lost, keys gone,
Wow, really tightening the available supply.
It really is. And looking forward, as that block subsidy, the new Bitcoin reward for miners, keeps shrinking towards zero.
Yeah, what happens then?
The network security budget, eventually it'll need to be funded entirely by transaction fees.
Fees become everything.
They do, which puts this economic pressure, this imperative on developing technologies like the Lightning Network successfully. We need ways to increase transaction utility, transaction capacity to generate enough fee revenue to keep the network secure long term.
Makes the Lightning Network even more critical.
Absolutely critical. But, amidst all the huge industrial mining farms, there was this great little story recently, a solo miner, just one person. They solved block 9110-440.
No way. What did they get?
They got the full block reward, 3.137 BTC, worth about $362,000 at the time.
That's amazing, like winning the lottery.
It is. It's that kind of story that, keeps the original Bitcoin dream alive. A needle in a haystack, sure, but a powerful reminder of the decentralization ethos.
Definitely.
And the compelling takeaway here, I think, the psychological impact of these supply milestones. Don't underestimate it. As that percentage of mined Bitcoin climbs, it just reinforces the core scarcity story.
Especially compared to fiat currencies.
Exactly, contrasting sharply with fiat and potentially fueling that fear of missing out, that FOMO, among both investors and institutions.
Okay, so we've covered a lot. We journeyed through the immediate market volatility, the macro pressures, and then pulled back to see that consistent long-term trend. Institutional adoption, market maturation, that fundamental scarcity.
Right, and if we connect this all back to the bigger picture, the current price action, it really reflects the temporary dominance of that short-term risk asset narrative.
Even while
Underneath, assets continue to transfer from those weak hands to strong hands, which indicates, increasing institutional legitimacy and that long-term conviction we talked about.
So wrapping up, here's a final thought for you, the listener. What really stands out to you about Bitcoin's evolving identity right now? Is it mainly that speculative asset just reacting to daily news? Or is it fundamentally transforming into something more, a foundational reserve asset for global institutions? And how do you think these two narratives, the short term versus the long term, might continue to clash or maybe even converge in the years ahead?